General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay. Today's Wednesday. Monday, Tuesday, Wednesday supposed to be the only trading days for ICT type traders. Wednesday, February the 5th, 2025. I don't know if I'm tripping, but it looks like that shit just went from the 4th to the 5th. Today, there we go. Today. Target hit. Target hit. Let's go to the weekly. Okay. Can't take this weekly order block line off. We're here. We're here to the old new week opening gap. Made it to the old new week opening gap. I'm looking for a gap fill. Keeping in mind, we could chop for Thursday, day before NFP, and aftermarket is Amazon earnings. Let's go to the daily. Okay, we did that. Let's see if we closed. What's this closing price? 771. We closed under this gap. I would have loved to see a break. It would have been like, okay, let me see what this is like, or see what this is hitting on. I still kind of like this. as the up candle. I mean, this up candle didn't take liquidity. This was the last high that we broke within this range. What's the catalyst that get us here? You know, tomorrow's unemployment, I believe, but the day before NFP, it don't really be. It's not the best Thursday out the month. Company's been beating earnings too, and we haven't been moving like that because Tuesday after market was earnings. I think the best earnings probably was Palantir. Just the delivery though, we're just going back and forth. This would be my low hanging fruit up to here. About half of this new week opening gap. $21,843.25. It's my low hanging fruit. It's my low hanging fruit objective. About half of the old new week opening gap. Should have put a fib on it to get the consequent encroachment, but I like picking old daily lows or highs. It's a personal preference. It seems like spring coming early because my allergies. All right, so expansion, retracement, closing above highs. This does still make sense as a target. Maybe above previous week's high. We get some turnaround action, or maybe we just want to go to all-time high. I'm still going to keep this gap here because technically there's an inefficiency right here. So let me move this. Let me move this one to here and here. We don't have no down candles in this area of the gap that starts right here. Matter of fact, I can do it like this. Yeah, we don't have no down candles right here. So if we do turn around, this would be an interesting area to sell to. Also, I still like that old target I had from last week that's up there. Okay, so looking for higher prices still. And we are breaking and closing above highs. Yeah, overthink it or nothing. Candles are telling a story. Let me keep this here. Yeah, we came to fill that. Came back to almost 50% of that. This is where we bounced on this. It's a propulsion block. Right here, this kind of is paired with a fair value gap. It's nothing really stopping it. So far, it looks like we respecting this gap. There's a BPR right here. We really could turn around. 1, 2, 3. Yeah, we could. Tomorrow could be a sale day. This is a breaker. So this is a high probability inversion. Fair value gap. Be aware we could sell on Thursday. We had 3 drives on the daily. I still like my target. Still like my target. Why do I like my target so much? Really, it's because it closed through this. Just keep this straight. I think it came from right here. Yeah. I'm still like my target. My target is order block. Well, it's not an order block, but my target is high probability inversion, fair value gap. Okay, still up target. My target is high probability inversion. 21,843.25. It's my key level to watch. Okay. Areas of interest really is here. I want to see if price comes here to look for buys. Trend line here. Had alert. Fair value for Nass. Let's fix this up. If this, then that. If that, then this. Okay. If we retrace, the buys make sense. To the target. If we run right to target. Wait and see if institutional order flow turns bullish, turns bearish, destroys bullish levels, and respect bearish levels before getting in. Do not call tops or bottoms. safety first. Be aware we can sell on Thursday. We had 3 drives on the daily. I still like my target. My target is a high probability inversion fair value gap. Boom is my kilo to watch. If we trace the buys, make sense to the target. If we run right to the target, wait and see if high above turns bearish, destroys bullish levels, and respect bearish levels before getting in. Do like I talked about. If you know how to get there, you just start pushing the button. I don't know, maybe I'm the only person that ever did that in life, but I have to remind myself. All right, y'all. Y'all keep it cool. Peace. And put this in the Telegram journal. All right, cool.